This conference will now be
I don't
recorded.
have time to keep running up here either.
So,
We had
so
gonna go.
it's recorded, and so if you miss anything, it'll be there. And I think
Because it was messing
Tuesday,
up too. That's why she
are we
sent me.
supposed to have Tuesdays off, or is that just for day classes? All right, so let me see if I can share the screen. For some reason, this document is kind of light. Let me just see. Oh, they're acting up. They want me to check for updates, and since I hadn't checked for updates, so let's talk about where we're going, and hopefully you can see this. We've been in absorption costing, where we look at the direct materials, direct labor, manufacturing overhead. Those are the product costs. Then we have the period costs. We're gonna change up now, and we're moving with looking at variable costs and fixed costs. So instead of looking at uh, just the overhead, just the manufacturing costs and selling administrative, we changing everything to looking at fixed and variable costs. Okay, so I think we're darker now, correct? So from now on, when we do an income statement, it used to be sales less cost of goods sold, gross profit, less selling and administrative expenses, net income. We're going to change it. It's going to be sales less variable costs, the variable manufacturing margin, less variable S&A, the contribution margin, less fixed expenses, net income. So the new format of the income statement: sales less variable costs, contribution margin, less fixed costs, net income. So because we're moving into planning, as we will for our project, that's the direction that we'll be moving in. So these are some examples on that. Now we move into cost volume profit relationships, or CVP. And the purpose of cost volume profit relationships is to show us the relationship between how many the dollars that come in given the number of units sold. So you got units sold on the bottom the horizontal axis, and we got dollars on the vertical axis. And there's a point at which the amount sold will cause us to break even. If we don't sell enough units, we're going to lose money. If we sell more than that, we're going to make a profit. So one of the key things to be aware of, and one of your key takeaways in this course, people expect you to be able to calculate a break even. They expect you to be able to calculate a break even. Okay? And a lot of time, we're concerned with some things such as how many products do we have to sell to make $1 million? How many products do we need to make sure that our loss is no more than 100,000? So to move with this into this, there are some things that we're going to look at. Uh, Unit selling price. So we've talked about this before, the price at which each item will sell, but then we need to know the unit variable cost. So unit selling price, we've looked at that before. We'll be working with that. But now we need the unit variable costs. And variable costs are costs that vary directly with production. Then we need to know the total fixed costs. Then we need to know the unit contribution margin. And the unit contribution margin is simply unit selling price minus unit variable cost. So the unit contribution margin is simply unit selling price minus unit variable cost. So we have this movement to fixed and variable costs. At 5, 6, and 7, you see 3 equations. You're required to memorize those equations to pass the course. So I'm going to say it a second time. 5, 6, and 7 are 3 equations. You're going to need to memorize these equations to pass the course. And I'm going to say it one more time so you can't say that you didn't hear this. There are 3 equations at 5, 6, and 7. You would need to memorize those equations to pass the course. So let's see how we're going to work with these equations and everything. And let's look at an example. Suppose we're selling computers. And in option 1, the selling price is $2,500. The variable cost is $1,500 for the computer. So we're selling MacBook Pros, selling price $2,500, cost $1,500, and the variable cost of our store is $150,000. Okay. The first thing we're going to do is calculate this unit contribution margin. We're going to calculate this unit contribution margin. We're going to pick up the unit selling price, $2,500. We're going to subtract the unit variable cost, $1,500. And so our unit contribution margin is $1,000. Unit selling price minus unit variable cost. Does everybody understand that?
Yes.
Okay. Suppose I sold one computer, what would my net profit look like? So let's assume I sold just one computer. So you should have this table up. Fill out this table for this first situation. Where I'm selling just one computer.
Professor, what is this template under?
If you look in course content, it's the last item in there, cost, volume, profit. So if this is the information,
And would this be on YouTube? Because the last ones haven't been.
I just need to put them on. I'll put it on, but
Okay.
I'll put it on. Selling price is
I don't see that in
$2,500.
course content.
Variable cost is $1,500. Fixed costs are $150,000. If I told you to prepare an income statement, if you sold just one computer, what would that income statement look like? Well, let's just see.
I don't see this on the course content.
Does anybody else see it in course
Me
content?
either. No.
I don't.
No, it's not there.
Me neither.
All right, let me see if I can put it in there again. just see. I need to get the course content. Yeah, that's fine. Let's see. 23201. Okay, so I'm gonna build content an item. I'm gonna put CVP in here. See if it's in there now. You go into course content and you're looking for cost volume profit analysis and the variable costing and cost volume profit handout. And we are on pages.
Your CVP?
Right. 6 and 7. So our information is this option 1 at 6. And what I've asked you to do is to prepare the income statement if one item is sold. So we're on situation 1 and we're selling one item. Can you prepare me an income statement? Can anybody prepare me an income statement if only one item is sold? If you're running this store and you sold only one computer, how much revenue would you have? If you sold one computer, how much revenue might you have? How much do we sell computers for?
I
How
don't see
much?
a price on here.
100 units?
One. I told you the selling price was what? We on page 6. And
Oh,
I told you the selling price is 2,500.
2,500, yeah.
The variable cost is 1,500. So if I sold one computer, how much would I get?
2,500.
Thank you, 2,500. And how much would that one computer have cost me? How much are my computers costing me? 1,500 each. So I would have made $1,000 on one computer. Okay. But I know that my fixed costs are what? $150,000. Okay. My fixed costs are $150,000. So I have a loss of how much if I sell one computer?
500?
My fixed costs are $150,000.
Oh,
So if I'm running a business and my fixed costs are $150,000, I sell one computer, what does my loss situation look like? what does my loss situation look like?
Do you
So I
subtract your
got
fixed?
revenue of 1,000, expenses of 150,000. So what would my loss be probably? 149.
40.
My loss is 149,000. So what this is showing us is that if my fixed costs are 150,000, when I sell one computer, I only, cover the fixed costs. Variable costs, of course, is covered, but the fixed, the profit only covers 1,000, so I lose 149,000. Does everyone see that?
Yeah, and these numbers like the SP, VC, and CM is all provided already, right?
Yeah, that's always given to you. Of
Including
course.
the fixed cost.
Well, see, all of that. Well, let's go back to our assumption. And you didn't have it, but 2,500 was selling price. The variable cost is 1,500. The fixed cost was 150,000. So if I sold one computer, I would simply have $1,000 profit. The fixed cost is 150,000, and so I would lose 149,000. So let's
Can
go to
you
beg
repeat
pardon.
that, Professor?
Okay. Now, how many computers would I have to sell so that I break even? How many do I have to sell so I can break even? If I sell just one, I lose 149,000. But I want to break even. How many computers do I have to sell to break even?
$60.
How many? How many?
60. I don't.
Did you say 60? 60? All
Yeah, that's
right.
what she said.
So if we multiply 60 times 2,500, what's the total amount we're going to get from selling those computers? 60 computers at $2,500
A
each. How
hundred
much?
and 150,000.
So we're getting 150,000. And then these computers, we would have paid 1,500 for each. So how much did we pay for the computers? If we paid 100,
90,000.
so 90,000.
Yes.
I'll take your word for it. Our
I don't know. Just
contribution,
make sure.
well, so our contribution margin now is what in dollars? Instead of 1,000, we sold 60 computers, so we got $60,000. But our fixed costs are still $150,000. So have we broken even? Did we
Nope.
break even? We didn't break even.
Nope.
We probably got to sell some more computers, don't we?
Yes.
Got to sell more than 60 to break even. Got to sell more than 60 to break even. How many do we have to sell to break even? And evidently it's more than 60. So let's see. Every time I sell a computer, I get $1,000, right? Right?
Yeah, correct.
And so I therefore need $150,000 here. I need $150,000 of all my fixed costs. Does that make sense?
Can you explain that?
So
Every
you buy
time you sell a
computers.
computer, you make $1,000. So you got to sell enough computers so that quantity sold minus variable cost is 150,000. That's the only way you can break even. So I just kind of make that statement. You got to sell enough computers so that contribution margin is going to be 150,000, cost minus selling price. So how many computers might that be?
Would you need to sell 150?
Mine says 150. So let's say we sold 150 computers. What's 150 times 2,500?
375,000.
375,000.
375. What's 150 times 1,500?
225,000.
225,000.
So 375 minus 225 equals 150,000.
Yep.
Yeah.
So therefore, you got to sell 150 computers. And so, and you'll have it memorized next time. Whenever we want to break even, we got this formula where the break even quantity is going to be the fixed cost, which is 150,000, divided by the contribution margin. And the contribution margin is what? Selling price minus fixed cost on a unit basis. See the little number here, selling price minus variable cost on a fixed basis. So the contribution margin is 1,000. So if you memorize this formula, when I give you a problem to work, you simply put the fixed cost in the numerator, you put the contribution margin in the denominator, and you divide fixed costs by the contribution margin. That gives you the quantity you need to sell. Any questions?
Can you repeat that formula one more time?
You're supposed to have memorized, Vols. The
What's
formula
up?
is right here.
My wallet?
Let's see.
Um,
So this is the formula you got to memorize. Break even quantity equals the fixed cost divided by the contribution margin. And the contribution margin is selling price minus variable cost. So we put in the fixed cost, 150,000. Then we put in the contribution margin, unit contribution margin, which is selling price minus variable cost. And that gives us the contribution margin.
Professor Boyd, quick question. I don't mean to cut you off, but I turned the assignment in, but I turned in like the wrong document for a different class. Is there any way you can reopen the submission for me and I can turn it back in?
We'll talk about it later, but let's get this break even down right now.
All right, no problem.
And everybody do this break even now. Are you ready for a quiz?
Like right
No.
now?
Well, I
No.
asked y'all the same thing.
No, I'm not ready
no.
for it. Will you have
No.
No.
tutorials?
Yes.
All right, can we do a tutorial one?
No, I need this video on YouTube.
Like an
It'll be
example?
on you. It will be on YouTube. Let's go to option 2 then. We're going to option 2. We got these assumptions. Everybody see option 2, right? Does everybody see option 2?
Yes.
It's on page
Yes.
6. So that y'all can redeem yourselves, I want y'all to come down here and first of all, show me what's going to happen if you sell one computer with those assumptions. Then I want you to come on here to this third column and give me the break-even quantity so that quantity sold minus fixed costs are going to be 0. Okay, so here are your assumptions: 3,000, 1,500, and 300,000. Those are your assumptions. I want you to go through using those assumptions and go to this chart and probably using this formula. First of all, do column 1 where you sell just one, and then do column 3 where you're going to break even. It's 4:35. How many minutes y'all need to do this? 10?
20.
Oh, please. Who said it?
At least 15, Dr. Boyd.
So we're gonna do the same thing we did right now, but with different numbers, right?
That's right.
All right. All right, we're gonna
That's the
try.
best way. That's the best way, right?
Yeah.
So we looked at it together. Now y'all looking at it on your own. This is almost the first thing you got to do on your project. Calculate how many of those items you got to sell to break even.
So we're doing option 2.
Option 2.
All right.
Option 2. You're telling me how much I'm going to lose if I sell just one and how many I got to sell to break even. So we'll give you all time to work on that. Not as much time as some of y'all want, but we're going to give you time to work on it.
Can you scroll up a little bit?
Am I where you
Not
want me to
that.
be?
Nah,
Here,
not that much. Nah, just to see the equation in the last problem you worked.
the equation right there. There is the equation. So on your quiz, when we get back, I'm gonna ask you to write down these equations.
So is that right in the first column?
Yeah, that looks right.
Okay.
So what's hard about that?
First column, it's the second one I got problem. First one I got the
Well, let's see. Do we have the first column done?
I got it.
Yeah.
What's our selling price?
Three 3,000.
What's the variable cost?
We can't hear.
1,500.
1,500.
What's our contribution margin?
1,500.
1,500.
15.
Uh, what's our fixed cost?
300,000.
300,000.
So what will be our net loss the first year?
298,000.
298,500.
298, I think.
You subtract 1,500. Wait. No.
Any questions?
How did you get that? What did you subtract?
I thought it would be
My costs were 300,000. I made
298,500.
1,500 when I sold one computer. So if I'm running a business where the costs are 300,000, and if I sell one computer, I pay my variable cost first to buy it. Then I got 1,500 in profit that I can move to cover some fixed costs. So we just simply subtracted 1,500 from 300,000.
Okay, I got it. Thank you.
Got that now?
Yes.
Now, $6 million question. How many do we got to sell to break even?
200.
200.
How many?
200.
200.
Somebody said 200.
I don't know if I got it right, but I did 100. Probably wrong.
Well, people said 200 first, so we're going to go with the 200.
Let's try
What's
it.
200? If we sold 200 and we multiplied that times 3,000, how much would that be?
600,000.
600,000.
And if we bought 200 at 150, how much would that be?
300,000.
And our fixed cost, our contribution margin is 300,000. And our fixed cost of what? 300,000. So if we sold 200, we break even. If we look at this equation, it simply would be what? The fixed cost, which is what? Which is what?
300,000.
300,000
300,000.
By the 1,500.
divided by what?
That's 1,500.
1,500.
The unit contribution margin, which is what? 1,500. That's all we did. And that's how we got 200.
Professor Boyd, would
Mm-hmm.
it be too much for you to go over the column 3 from the start again? My sound had cut out.
Okay. I told you you want column 3, you want the quantity sold to be enough sold so that the net income will be zero. You would break even. How many do you have to sell to break even? So we know the break even formula is fixed cost minus contribution margin. Okay.
Mm-hmm.
So we take the 300,000 in fixed costs divided by the 1,500 contribution margin. The 300,000 fixed costs, unit contribution margin is 1,500. We get 200. Do you see the 200?
Yes.
Right. Now, so now we're gonna do this. Remember we talked about the new income statement: sales less variable cost, contribution margin less fixed cost, net income. So we multiply 200 times 3,000. That is, we had to sell 200 computers to break even. 200 times 3,000 gives us 600,000. Those computers cost us 1,500 a piece. So we multiply 200 times 1,500, we get 300,000. Selling price 600 minus variable cost 300 gives us a dollar contribution margin now of 300,000 for the 200. The fixed cost of 300, and so therefore our break even is zero. Fixed costs are gonna stay at 300 all the time. Okay, and in these examples, it's always 300,000. Our first set of examples. You got to come up with a quantity that will do what we want it to do.
I be taking every day to my gas. I still whoop you. Still in this line, girl. The fuck.
All right. Now we don't want to just break even, do we? Not the people in this class. We want to make $1 million. We want to make $1 million from these people. So, how many got to sell to make $1 million? So, going back to our original example, how many you got to sell to make $1 million?
200.
Why don't you just divide by 1,500?
So, we've got a target profit of $1 million. So that target profit is treated as another fixed cost. So to come up with the number we got to make, we're going to take the fixed cost of 150,000. We're going to add to it the $1 million. And then we're going to divide that by the contribution margin again of 1,500. So our equation for a specified target profit, TP, is the fixed cost plus that profit we want divided by the contribution margin. 150,000 plus the million.
Wait,
Add
where did the million come from?
we decided that's how much money we want to make.
Okay.
If we had these cars, don't you want to be a millionaire? You don't want to
Yeah.
just break even, do you?
No.
So we have to figure out if we're running our business, how many we got to sell so we can make $1 million.
Okay.
So the second equation that you've been told to memorize is this target profit equation.
So So
So
after you
what?
add 150,000 plus a million, you divide it by 1,500 or you multiply?
Mm-hmm.
Divide?
Divide.
Right.
I got 766.66.
So let's just put 767 because if we're close to $1 million, that's where we need to be. We can't sell .6. So let's assume we sold 767. What is 767 times 2,500? How many? 1 million what? 117, 500.
Wait, I couldn't hear you. It was like movement. What you did the 767 times?
2,500. So if you multiply 767 times 2,500, did you get 1,117,500?
917.
1,917,000?
Yeah, 500.
Yeah.
And where will we put that?
Right there on the sales. What's the variable cost going to be? 1,500 times 767. So what's 1,500 times 767?
It's
One million
1
one hundred
mil.
thirty-five five hundred.
100 and 500.
1 million what?
150,000 and 500.
150, comma 500. So if we subtract 1,917,500 from 1,150,500, how much do we have here?
767 500.
767, 500. And if we subtract the fixed cost, how much did we make? How much were we supposed to make? A million one five hundred times minus 767,677,500 is how much?
It's gonna be 767,000 even, not 500.
767 even. That's fine.
Yeah, I think that's right.
Let's see if I get this out. But what's the difference going to be? So,
It's 383 500.
so 1,917 minus is 767. Your fixed cost of how much? 150,000. Did you make? Did you make $1 million? Did you make $1 million? Probably the reason is that we were using 1,500 and we should have been using what? 1,000. 1,500 in the second one. So our contribution margin is 1,000. So how many do we need to sell now? You will use 1,000. How many do we need to sell now? How many?
1,150.
It should be 1,150. So we used the wrong CM. So if we sell 1,150, what is our selling price going to be? Total sales going to be if we sell 1,150. If we sell 1,150, what's our selling price going to be? Total sales. And multiply 2,500 times 1,150. How much would that be? Say 2,875,000. How much we gonna have to pay for those computers? 1,500 times 1,150,000. How much is that? So 1,150,000 times 1,500, 1,500. How much is that?
Is it 1,150,000 or 1,150?
It's 1,150 times 1,500.
Yeah.
That ain't even the right one. That's 500 million.
Wait a minute now.
1,725,000.
1 million
One
what?
million. 1,725,000.
Yeah, 1,025,000.
Gotta do small numbers for y'all. So 2,875 minus 1,725 is how much?
$1,150,000.
So if we subtract 150,000, what's our net income?
1 million.
1 million. All right, time for y'all to work on your own. Go down here with these assumptions and tell me how many it's gonna take to make $1 million. You can go through and prove it. So get to work. How many is it gonna take? So how many we got to sell in this second scenario to make $1 million? Don't all speak at once.
Whenever I did it, once I got to the end, I didn't get $1 million. I got um $1,500,000. So
If you round, you'll be off. So you just got to be close if that's the case.
okay,
So
well, when I rounded, I had got 867.
okay, so you're going with 867. So let's see what time we go with 867. What's 867 times 3,000?
2,601,000.
2,601,000. And what then is our variable cost? 1,500 times 867.
1,305,000.
1,305,000. 1,305,000.
No, $1,305,000. I think 1300500.
I got it. So if I subtract 260, if you make the subtraction, how much you got left?
$1,300,500.
1,300,500. Is that what you said?
Yes,
That's
sir.
correct.
Yes, sir.
So our goal was 1 million. The rounding gets us off somewhat. So you won't always be perfect.
I
So
got
we just want to,
668, and that put me at like 1,500,000 instead of like 1.3500.
you had how many?
My quantity was 668, and that put me at 1,500,000 instead of 1.3,500,000.
And let me put your numbers here. You had how many? Six what?
668.
So you had 668. So 668 times 3 million is 3,000 is what?
2,004,000.
2,004. What's your variable cost going to be on that 6 million? 668 at 1,500.
1,002,000.
1 million, comma 2,000.
No, the sale's supposed to be 2,004,000.
2,004.
Yeah.
And the sales are how much? I mean the cost is what?
Your cost is 1,002,000. So 1,002.
1,0. So if I subtract 2,004,000 from 1,002,000, how much do I have?
1,500,000. Or no, you won't have 1,500,000. That's after you do the 15. But it's
I mean, 1 million. Say you had 1,500,000. But now we
yeah,
got
it's
to pay
after you
these six.
subtract from the 15.
Say
It's
what?
them two subtracted from each other is 1,002,000, and then after you do it minus the 1,500, will get you the 1,500,000.
That's 1 million. 1,002,000. Let me straighten it out.
Yeah, the same one as above it. Yeah.
All right, and you're gonna subtract what?
Subtract about 1,500. And I give you 1,500,000.
If the mafia was here and you told them that you're gonna pay them 1,500, what would they do with you? If you owed them 300,000, what would the mafia do to you?
Oh, we were doing it based off 300. I thought we were doing it based off the 1,500.
I do 50. The fixed cost is 300. You gotta pay 300 no matter what.
Oh, okay, I got you. Then yeah, it's the 867. I thought we were doing it by the
Yeah.
1,500.
So we do the 867 then. Now, not the 1,500. It's I tell you, it's 300,000 all the time. So let's go back to this example. So we got a 1,305,000, and if we subtract 300,000, we're gonna have about what? 1,500,000, which is close enough, near that $500. So we will let that go on. We just want to be close to 1,000,000. Okay, now sometimes businesses lose money when they start out. So suppose we go back here and we say we start now. We will go with a loss of 100. We want to sell enough people, enough computers, so the loss will be 100,000. How many computers do we have to sell so the loss will be 100,000? It's got to be more than one, but it's not going to be as many as 150. So I'm just giving you a range there. But how many computers you got to sell so the loss will be 100,000? So now we're going to go to our target loss formula. Our target loss formula. And the target loss formula says when we're trying to minimize the target, it's fixed cost minus the target loss gives us contribution margin. So we're going to take the fixed costs, which are 150,000. We're going to now subtract the target loss, which we want to be 100,000. And then we're going to divide that by what? As usual, the contribution margin of 1,000. So how many do we have to sell so that the loss will be 100,000?
50.
Somebody says 50. Natasha says 50. So what's 50 times 2,500?
125,000.
And what's 50 times 1,500?
75,000.
So our contribution margin would be what? 50,000 maybe? And the fixed costs were what? So therefore, we got a loss of 100,000. So notice the four scenarios: selling one item, losing 100,000, breaking even, making $1 million. So with your projects, this is what you're going to have to do. Tell me, if you sold one, what would the net income be? How many you got to sell to make 100? How many you got to sell to break even? How many you got to sell to make $1 million? That's what you got to be able to calculate. Are we going to be able to do that? What's your question? You're not in a group? Oh, well, I had my group sheet out earlier.
Professor, I'll be able to do it if you put all of this on YouTube.
You better what? Do it if what? If it's on YouTube, you better do it.
Can you please put the recordings on YouTube?
Y'all haven't brought me any wine up here yet.
Yes.
Y'all not holding up y'all part of the bargain.
I'll bring you some more in next class, which is Thursday, because we ain't got school Tuesday.
What's your name down there? Oh, that's Robert Brown.
I'll be there. I'll be there in person next class if you put all the videos on YouTube.
Professor Boyd, will you be having tutorials on Monday or something?
Sure.
Thank you so much. What time? 6?
6 o'clock.
Okay, I'll be there.
Be at home. Okay, so team, I put you on team 2. So we're adding Robert Brown to team 2. And I'll put these in. That's perfect.
Can you tell me what group I'm in? Because I don't know.
Hicks?
Yeah.
I don't see you in any group.
Oh, well, I need a group then.
Al, I'll put you in group 3.
Okay.
So group 3, Hicks used to be an A student, but she's in principal 1. So yeah, I just have to make her work. Okay, I'm going to put a couple of homework problems in for you to work on this. Now, when we get ready to do these homework problems, let's just see if I can find one. Or do I have it in here? Wait a minute. I did put that in there, didn't I? Rid of these headers and footers. Okay. So here's your first homework problem that's due on Thursday. In this problem, so we got to go get, so we were just kind of doing product, just inventory costing. Principles 1, got to get back to making the item. So you're gonna have
So
to.
is this problem on Blackboard?
Yep, right there. Check and see. It should be right there with us handout.
It's the one that said problem 3, right? It's the one
For
that says
what?
in class problem.
It
This
says
is the
CVP3.
in-class problem.
When is this due?
Tomorrow
Yeah,
by
it's done.
midnight.
When will the YouTube video
When
be
is it
posted?
due? When is it
This
due?
due next Thursday. This due next Thursday, y'all. It's the
Oh, he playing
21st.
with us.
I already looked at the date.
It's due Thursday.
All right.
Professor Boyd, I also have one more question.
I might need to make it due by Tuesday for you all, so I
Are
see
we
if I
submitting
can
this individually?
try and
Yeah.
see if I need to give y'all another one. You know,
No, we
how
already.
y'all do
No,
that?
no.
No.
Professor
Can you put up?
Boyd.
Now, don't copy nobody else's wrong stuff,
No,
okay?
Professor. Can you
You
just
can
please
make
put the
your
video on
own
YouTube?
mistakes. You don't need to get anybody else's mistakes.
Dr. Boyd, my
Professor
mic was
Boyd.
messed up earlier, but you was talking about like that 25 points that we can easily get. You was talking about like groups. You know what group I'm in, right?
I'm too tired to handle that now. We'll have to handle that next time. Let's go over this problem.
Okay.
In this problem, we'll handle it, but I'm getting old. This is my fourth class today. We have raw materials, 1 ream at 10. That's raw materials paper. You got raw materials ink, 2 cartridges at 20. You got direct labor, 2 hours at 10. Manufacturing overhead fixed as 100,000. The administrative expenses fixed as 40,000. The unit selling price is 2 times the unit variable. It's 3 times the unit variable cost. So with this information, you got to come up with the quantity required to lose 100, break even, earn $1 million, net income if only one book is sold. And suppose you hired an accountant for 50,000. You said keeping up with all of this is too much. So suppose you hired an accountant for 50,000. How would that change things in terms of breaking even? If you had to break even but you hired an accountant, how would that change the break even? So when you have more than one variable cost, you just got to add them up. It's got variable by. Y'all see that variable by these things? You see that, Chris? So what's the total fixed cost going to be in this problem?
I was desperately
What?
when the field tank up big wash the car beat.
What would the total fixed cost in this problem be?
Is it 40,000?
No.
100,000?
No.
Oh, I don't know,
It's
man.
140,000.
140.
So there you
But
go.
make sure you do your own work. You ask somebody else for something, don't tell them what their assumptions were. But we had administrative overhead and manufacturing. You have to add them together. You're gonna have to do the same thing with these variable costs. And y'all like to do that, and y'all should be kind of good with this now. Now you're just talking about the raw materials and labor. You don't have to worry. So you don't have to add any manufacturing overhead, and you don't have to add any what is it predetermined overhead rate. All you got to do is work with what's here. Don't add anything else. Just work with the numbers on this page. Got it?
Professor, can you please put the last 3 lectures on YouTube?
Yes. I will go home. It'll take a little while for this one to finish, but I will try to have all of them up today, tonight. And that way, when we have our session on Monday, when Miss Mann shows up, she the only one shows up, we'll know.
Miss Mays will be at the next one. What time on Monday?
6. And we'll go through this. So it's some. So number one, review the problem we work where you just had one fixed, one variable cost, one selling price. Now we're changing it up a little bit. You got to calculate the selling price. So you got to do a couple of things, but it's the same thing, but it's back in, we started off simply, so you don't, you get the overall concept. You got the concept now, you got to calculate the selling price. And it's 3 times the variable cost only. See, it says this 3 times the variable cost. So you got to read and do this problem. Don't do another problem. Do what you've been doing before. Got it?
Yes.
Good.
So this is like
Anything
what
else?
we just worked on right now?
It's like it, but what we worked on just now was a Principles 1 inventory problem where we were buying items and selling them. Now we're back to manufacturing accounting where we make the item. But we got to do the same thing.
Okay.
So we'll go over these. We'll work them in the
Tutoring on Monday.
tutoring on Monday. We'll go over it again on Thursday. Then we should be ready for a quiz on Thursday on this.
Professor Boyd, I have a question.
Yes.
So do we have class on Tuesday? Because I heard the university is having a mental health day on Tuesday, and some of my teachers
Y'all have missed
canceled.
too many
So
days. Y'all missed too many days, Melanie. You all
Professor
have your,
Boyd, give us a break.
all right. You have a break. That's why I said Thursday. You heard other people saying this was due on Thursday, didn't you? Or you weren't listening.
No, I heard you say that. I was just double checking.
Oh, you just double check.
Yes.
We will observe the university's mental health day. So you all work on your mental health on Thursday. It might be good to work on it on Friday and on Sunday. So what should you be doing on Friday?
Honestly, I'm gonna be doing work. I'm gonna be doing
Studying.
some work, watching your YouTube videos.
Well, make sure you watch a little Good Friday service too. And then you do some resurrection services on Sunday. And that might help you some. That might relieve your stress a whole lot more. So gotta remember you're working on your mental and academic now, and you're working on your physical fitness. I hope you're eating well. But in life, you got to work on your spiritual development too. Yeah, you need to work on all 3 of those because sometimes things are going to happen, virus and other type things, and you're going to need some spiritual support to go with what you're doing. So, the most important Christian holiday out there, but everybody, you need, as you go through life, uh, a spiritual component to your life too. Or else you'll be missing something. So try to do some spiritual things too. Okay? Okay, so that's my little sermon for today. You'll have a good weekend. Like I say, don't forget your spiritual development, especially during this weekend. Spend some time on that. And you tried all these other things, TikTok and all that kind of stuff. Try something that might work. And you might find that you're going to relax and you're going to be better able to do this work. Okay? Okay. So have a good one. Like I said, we'll be there Monday and we'll spend the time Monday looking at this. We'll this is the first time you saw it, so we'll go into it and work on it some more and do some things on Thursday. So your quiz probably will not come until the next week. So, so you have ample time to review and work with this, okay?
Okay.
All right, and then it's going to be time for part 1 of the project. So we'll be part 2 of the project. So I'll be putting in part 2 of the project in terms of what you got to do. You all have a good one. We'll see you all next class.
All right.
We should turn that horn, can we?
Amen. Yeah, I guess you can. Do you have something, Eric?
Yeah, I was gonna
You muted.
Okay, yeah. Last class about my exams. Did you ever get back and check those? I was trying to. It's kind of hard to keep up with my grade in your class sometimes, and I be working a lot. I be having a lot going on, so I'm just trying to check, see
I'm
how.
going to send out the revised, updated midterm grades tomorrow.
Okay, and with that being said, did you with our group work? Did you know I'm in group? Like I have a group. It's like 7 of us. I think we was the one group that you was talking about. It's a lot of us. Do I have to send you a picture or something, or like what was that? I had to send you. Or,
No, it's one per group. And your
okay,
name
yeah.
needs to be on the group submission. So I
Okay.
only want one per group, and your name needs to be on the group submission.
Was it I think Diamond or maybe Ty Leje, one of them? Did you get or Brianna, maybe one of them ringing the bell?
I think everybody, all the groups got it in.
Okay, cool. I just want to make sure I ain't missing no points. Is that gonna be on the updated ones tomorrow? That was the
No,
first
because
part of the project.
that's period 3. So I'm going to get period 2 closed out. So period 1
Okay.
and period 2 will be closed out. Remember, I gave extra chances on the midterm, so the grades will get higher.
Mhm.
So
And
that'll be out tomorrow.
You got all my. All right, man. Tomorrow when I see the grades or whatever, I'm just trying to make sure I get some extra points for my midterms. I definitely did email you and turn some in. And
Look
one
at it
last.
tomorrow. Look at it when it comes out. If anything is missing, email me. If you are due points, you're gonna get them. Okay.
Okay.
Yeah.
The last thing, we got enough work left to make sure I can suffice in this class. I really need this class right here. So that being said, we got this project, and we'll be walking down the semester.
Project and the final exam.
We ain't got no more. And we got a quiz. We got the quiz over this stuff we going over right now.
Yeah, I got a quiz on that. So so that all the points are not based on the final exam only.
Okay. And then I got the home, and then we got the project, and that's worth a lot of points if I'm not mistaken.
100 points.
So
The
that can really
project
make or break the
worth 100
semester.
points. So what?
Do you feel like the project can make or break the semester?
Yeah, 100 points.
All right, Ben. So I'm gonna just make sure I lock in on that, and I'm just trying to finish strong. Appreciate you. That's all I need. Thank you for
Okay.
your time.
All right. Have a good one.
I was saying you come with this homework he had to do today because I didn't understand that. And that's 10 points. I could miss out. I could just take zero for 10 points.
The homework we had today.
Yeah, this right here. All the T accounts and stuff. Like, I don't understand none of that.
All right, here you go.
Thank you.
Where's my mask? You didn't understand any of it. But that spreadsheet.
I know. I understand the job order one. I understand that part. It's like when we get to the journal entries and stuff.
What were we working on today?
And the cost of goods and stuff. Like, I never understood none of that.
Get this in the section.